Are you on the correct track? If we sold Tesla earlier and then bought it back, a lot of people did that. However, one person, Carter Worth, managed to foresee these precise times. If you are familiar with him, you should definitely follow him. Before we continue, make sure you like and sign up for more jaw-dropping Tesla insights. At first, he declared with confidence that the stock was worth about $240. The timing seemed perfect, but hold on tight because he quickly changed course and advised purchasing the stock at about $110. Talk about an incredible ride. We were all intrigued by his market projections. But just when we thought he had everything figured out, things took a turn for the worse, and the stock fell sharply as if in reaction to THEAT felt like a struggle for the stock to recover, trapping investors' funds and leaving them wondering if they would ever climb higher. Now that you're wondering what the point of investing in Tesla is after such a setback is valid, and we're all eager to hear the answer. Trust me, you don't want to miss this. Following the previous quarter's exuberant rise, it was like a reciprocal equal and opposite action. We found ourselves questioning the purpose of investing in Tesla after such setbacks joined the well-known chart in 2019. Master Carter Worth made a startling revelation when he said that Tesla shares, despite the recent decline, were set to surge. According to him, the stock had reached a historically low point that had not been seen since his IPO. The situation appeared to be so dire that it might actually be a wise risk. But here's the kicker. Back in 2019, let's fast forward to the present. Carter Worth believes that the opportunity to invest in Tesla hasn't come and gone just yet. Despite some short-term gains, he firmly states that the big picture indicates the potential for further growth. In fact, he asserts that Carter Worth correctly predicted the bottom of Tesla stock when it was just $13 per share. Can you believe that he seemed to have a knack for timing? Within a week, he doubled down on his position and bought even more shares. Individuals who make decisions based solely on the near term could regret them later, when Tesla hits new heights. While some may contend that there are no longer any possibilities and that it is too late to jump on the Tesla bandwagon, the truth is that even if the stock has seen fluctuations, it has increased by more than 10 times since 2019. It has risen tenfold from its modest origins. So instead of succumbing to the illusion that the opportunity is finding a medium ground where some earnings are taken from the progress done thus far, and the remaining portion is left to benefit from possible future growth is suggested by slipped-away work. Remember, people, that this surreal trip through the highs and lows of Tesla stock illustrates the erratic character of the market. While short-term profits may be alluring, the long-term view is what really counts. Avoid being one of those people who looks back in 2030 and wonders what could have been. Instead, embrace the excitement, risks, and potential rewards that come with investing in Tesla. However, this strategy will prevent you from experiencing compound returns, which will result in much smaller gains than you could have made. This is one of the reasons actively managed funds frequently perform worse than the market, because they exit their winners too soon, missing out on significant growth. Let's examine a clear illustration in more detail. In her long-standing obsession with Tesla shares, Cathie Wood has made it her favorite place to invest her money. If I were to show my Taiwanese-Canadian wife the number 4.44, ARK Invest returned an astounding 4.44. The number 4 sounds like the word die, and seeing triple death in the performance figure can be considered a curse. Somewhat concerning, despite Cathie Wood's perceptive comments against Tesla, the stock surged by 741%, while ARK Investment had losses in the same time frame. This can be explained by taking profits too fast. In the stock market, anything is possible, Carter continued. But anything is not credible when the price targets are too high. When I publish notes for hedge fund managers' pension plans or families, they frequently doubt my optimism if I say a stock could triple from its current price. For this reason, I aim for setting price targets that are both realistic and imaginative, but not beyond reach. Dan may have imagined $60, but it could just be an anomaly. This circumstance emphasizes the need to be cautious when depending too much on hedge fund managers and analysts for price goals, since they frequently base their decisions on modifications to appease their audience rather than on objective truth. Although not all hedge fund managers or analysts operate in this way, as Dan Nathan himself acknowledges, there are many who do. This approach isn't inherently flawed. Rather, it caters to the limits of people's imagination. If you haven't seen the stock double or even increase tenfold in a short period of time, it's easy to fall into this mindset of setting lower expectations. If you would rather see a lower price, Target can accommodate you. Unfortunately, this approach prioritizes pleasing people over outperforming the market. Fossil dive, a customary since the mystery has remained unsolved for a very long time. Many people have come to believe that it is an impossible task. However, I can assure you, my friends, that this kind of thinking will only limit our potential. Just because no one has dabbled in the field of electric vehicles before doesn't mean that it isn't possible. Remember, groundbreaking ideas frequently come from defying the odds. Let's talk about Tesla's advancements by getting right to the point. It's critical to determine whether we're focusing only on the stock price or if we're also looking more closely at the margins and cost-cutting measures. Additionally, it's important to determine whether we're fixated on the technical aspects of the stock trading. Well, friends, this recent sell-off is the exact opposite of what happened in the previous 2 years. We have a stock that nobody seems to believe in, but analysts keep raising their price targets, and guess what? The stock keeps flying higher and higher. However, let's pause to consider the great revelation. If you will, the highest multiples. James alone won't cut it anymore when you start producing cars and earning tangible profits and establishing real margins. It's time to face reality. This is where it gets fascinating. Suppose we dare to trade it to the realm of reality. In that case, there's a chance, perhaps even a strong possibility, that earnings might take a temporary hit. My dear managers are often attributed to companies before they start reaping substantial profits. It's the realm of biotech and technology stocks that have to make a profit. Tesla may choose to strategically lower prices, which would have an impact on short-term profitability. But here's the twist. With lower earnings, the stock multiple may skyrocket. I know it sounds counterintuitive, but there is a method to this madness. Let's take a moment to step back and consider the world of dreams. Dear investor, Tesla still has a lot of aspirations to share. Many of them, I firmly believe, will come true. One that sticks out as the pinnacle of futuristic driving is the Cybertruck. Although some investors may no longer be as confident in the truck's ability to drive itself, that's exactly what works in our favor. You see, there is no assigned valuation for that part of Tesla's business, which effectively lowers the stock price and presents us with an opportunity to buy more shares at a discount. But wait, there's more. Tesla's energy storage business, speaking of dreams come true. Elon Musk himself stated on the most recent earnings call that there may be a multi-billion-dollar opportunity. Granted, it may be a long shot, but let's not rule it out completely. Dojo's valuation alone may eventually surpass Tesla's current value. Additionally, the next-generation vehicle promises affordability and unrivaled values. What you've seen, ladies and gentlemen, is that the voyage through the highs and lows of Tesla stock has been nothing short of a roller coaster. With Carter Worth's audacious projections colliding with the unreal variations in cost, we have seen that the market is erratic. But there is a ray of hope despite the gloom. Carter Worth the chart. Thank you for joining us on this exciting journey. Despite recent losses, Master sees potential for Tesla to move into high gear. He believes that the stock's historical low position might be a turning point for a tremendous increase. Remember to like and subscribe for more mind-blowing news about Tesla stocks. And as always, happy investing in the world of Tesla stocks.